So we've talked about this in the past, and any number of other people have as well. The AI story, I think, clearly is here to stay. And whether it's NVIDIA or Broadcom, et cetera, for a year now, 2 years now, there's been a little smoke. You've had, well, we're not going to invest in that data center as much. The DeepSeek Monday was a moment. But the CapEx story remains in place. The investment story remains in place. And to your point about the $100 million bonuses, which, by the way, I don't believe that. But
really, you would take it, right?
$100 million bonus.
It's okay. You don't have to answer. I mean, anyway, if Solis, he's doing great.
So how do you know Solis isn't giving me $100 million?
All right. Carry on.
They're not. But that story is still an important theme in markets. And when you look at the factors that have worked this year, size across spaces has been one of them. And I'm looking now, Microsoft is up 14%, NVIDIA is up 9%, Meta's up 19%, basically at a high. The only one of those big names that's not working is Apple, because the street generally views them as having missed, at least thus far, the AI trade entirely. Now, we'll see in the fall whether that's the case or not. But that theme is wholly in place in the market. You see it in utilities are the third best performing sector. That's because of Constellation and Vistra and the deals with Amazon and Microsoft. So that story is wholly in place. The replacing us, man, I know everyone's talking about this.
Yeah.
I saw a debate the other day, the 30-hour work week that was predicted 100 years ago is finally. No. I don't think that. The history of the United States and productivity enhancing technological advances. The cotton gin is the one everyone uses, but what about the ATM machine or the computers in the 1990s, et cetera, has always resulted in just a reorganization of the economy, not a replacement of the economy. And I was just reading Chip War, the book about, obviously, semiconductors, and he was talking at one point about all the women that were employed connecting the wires into the wall. That obviously was replaced by switches, by Cisco, and all those people had to find new jobs, and they did. And I can't imagine that this time is not going to be different. The idea that we're all going to be sitting around playing tennis all day,
I feel attacked. It's okay.
Worrying about how we're going to kill 40 hours or 100 hours a week, no matter how much you work. I think that's science fiction, at least for now.
David, we are also in a race when it comes to artificial intelligence with regard to China and its moves. Where are we in that race today in terms of the competition with China?
Well, I think, Maria, the competition with China is fierce. China is a significant competitor in AI. To the chips, the hardware, to the equipment that makes the semiconductors, the U.S. has a more significant lead there. I think NVIDIA is something like 1.5 or 2 years ahead of the Chinese champion, which is Huawei. If you go deeper in the stack, the leading manufacturer of chips in the West is TSMC. They're several years ahead of the Chinese equivalent, which is a company called SMIC. So as you go deeper in the stack, the U.S., or let's say the Western side, has significant advantages, but China is doing their best to innovate, to work around the restrictions we try to place on them. And so they are a significant competitor, and we basically can't get complacent here, because we have to remain paranoid about China, because they are doing everything they can to catch up.
Well, let's talk about that, because, we've made the point that China is not just a competitor, but an adversary. And, AI chips are used not just throughout technology in America, but in our military. And for a long time, China was stealing intellectual property. What about these export controls on chips that we've talked about and that the president has instituted? I know you've criticized the regulatory framework in terms of too much control on those export controls. Is that right?
Yeah. So, Maria, back in 2022 and 2023, there were export controls placed on the leading edge semiconductors going to China. And there was significant bipartisan support for that. And I think you can make a strong case for those export controls based on the dual use, that the fact that AI models although they're primarily a consumer technology, there are, in fact, some military applications. So I think that those export controls on China made sense. I think most people in Washington support them. However, the Biden administration did something different at the 11th hour. With 5 days left in the administration, they dropped this thing called the Biden diffusion rule, which was not an export control on China. It was an export control on the rest of the world. And it was motivated by the fear fear that if we sell chips to the rest of the world, that somehow they could be diverted to China. And the Trump administration has rescinded that Biden diffusion rule. It was overly bureaucratic. It required every sale of a GPU anywhere in the world to basically get a license from the Commerce Department or qualify for a limited exemption. And that was just too burdensome. And I think that the mistake in that thinking is that we have to prioritize two objectives. One is we don't want China to catch up. I think there are good arguments for not selling China our leading edge semiconductors. But at the same time, we want American technology to dominate the globe. We want American technology to be the standard. We want our market share to be the highest. And if we restrict the sale of American technology to the rest of the world, I'm talking about outside China, then I think we'll regret it, because Huawei will be everywhere soon. I mean, they are going to compete very vigorously with us. And I think that if we don't saturate the global demand while we have this market to ourselves, we're going to be kicking ourselves about it, because I think that Huawei will eventually satisfy that pent-up demand. So I think we need to have a more nuanced approach here on export controls. I think restricting China makes sense, but I think we want to make sure that we win the rest of the world.
It's like NVIDIA's CEO, Jensen Huang, have said that, if you do it too much and control it too much, it will only encourage China to double down on its own manufacture and innovation in that space.
Right. And I think that when we think about our friends and allies, we want to be a good partner. We want to be the partner of choice. On the one hand, we're telling the world that AI is critical, even existential, for the development of their economies. But then on the other hand, our government is making it harder. At least this was under Biden. We've changed this now under President Trump. But we were making it harder for the rest of the world to basically adopt this technology. And this is American technology. If in 5 years we look around the world and see that American technology has, let's say, 80% market share, I would define that as winning. That's winning the AI race. But if 5 years from now we look around the world and all we see is Huawei technology, the way that, frankly, Huawei is dominated in 5G, that would be losing the AI race. So I think that the Trump administration understands this distinction, and we want to encourage American exports. To be sure, we should name our security requirements, but what I hear from our friends and allies is that they're ready to abide by our security requirements. They're not going to resell the technology to China. So I think we need to make sure that American technology dominates the world.
Nikki, I will also note, if you take a look at the year-to-date performance of NVIDIA and Avgo Broadcom, they are neck and neck right now. NVIDIA up about 8.7% on a total return basis. Avgo Broadcom close behind with 8.2% total returns.
Right. NVIDIA is the only one of the Mag 7 stocks that is expected to grow in terms of the top line more than Broadcom.
True.
Which I now know because I read Carmen's story.
It's a good one. Everyone should go read it.
One name that has rallied in the last 3 months, NVIDIA. That stock up more than 20%. And your next guest breaking down the technicals of that and more. Katie Stockton joining us now. Fairlead Strategies joining us. Apparently, yellow is the color of summer. Contessa Brewer just said that. Katie, good to have you on right now. How do the charts look for NVIDIA?
We've seen a really massive relief rally off that April low, almost 70% upside. So you can imagine after that kind of gain, NVIDIA does look overextended. And we haven't been terribly worried about the stock until very recently, when we saw some signs of short-term and also intermediate-term now upside exhaustion. That's based on our DeMark indicators. And we have a couple of charts that we brought with us. On the daily chart of the NVIDIA, you'll see there's a counter trend signal denoted by an arrow, and it's coming not terribly far from resistance, which is pretty strong, right around 150. And then if you zoom out to the weekly chart, you'll see also that as of this week, we have a weekly signal of the same kind, and we haven't seen these signals since the peak back in late 2024. So I do think there's risk here of a retracement, and that, some investors might think about reducing exposure with that in mind.
Well, it's fascinating, too, because you've got two things here. You've got investors and you have traders. And Katie, you know better than anybody, they're very different things, right? Investors, you buy for the long-term months, quarters, years, decades, whatever it is. Traders, they could trade every minute, every second, every day to see what things are. And guys, we can bring that chart back up. What's fascinating about NVIDIA, Katie, is that for all the attention it gets, we talk about it all the time, the stock has not made investors, longer-term buyers, any money in about a year.
That's right. So we've seen the stock move from a cyclical uptrend into a long-term trading range. You can see that in the kind of flat slope of the 200-day moving average, which, by the way, is about 11% below current levels. It's not a major support level. The major support defining the bottom boundary of the range is closer to 100. So it's a pretty wide range. And within that range, traders actually probably should welcome the possibility for more volatility, because for those that bought in April, they're up nearly 70%, right? So I think traders, it's actually a better environment in NVIDIA for them as long as this trading range is intact. And as you'd guess, the trading range does reflect a loss of long-term upside momentum to suggest that the broader market might be challenged for the balance of the year.
Well, broader market might be challenged, maybe a DeMark indicator, short-term top on NVIDIA. Said a lot without having to say a lot. Well, the Wall Street Journal reporting that the U.S. preparing to revoke certain waivers for foreign semiconductor makers that use American technology in China. So, Tim Seymour, explain this to us like we're fifth graders, because there's a lot of double negatives in the revoke, not use waivers. What exactly is happening?
I think this is about promoting the American or the U.S. producers here. But I don't think that today's news is part of the AMD outperformance. Remember, AMD's underperformed NVIDIA by 60% in the last 12 months. This is about both positioning, underperformance. AMD just came out of their event where they gave a lot of insight into the 350 and the 400 chips. These are chips people had forgotten about when in the first early days of AI, it was really seen as they were a distant number two, but they were a number two. So to me, this is, I wouldn't call it relative value because NVIDIA is cheaper. I think this is relative positioning and where I think there's a lot more momentum. Meanwhile, their core business, their CPU business, is actually doing quite well. I don't think today's news, I think it just highlights the fact that there is rotation going on in the chip space, even though, yes, U.S. producers and those that are strategically aligned with this administration and government are going to outperform.
All right, I hope you're all doing well today. NVIDIA finished the day about 1% lower, and the S&P finished the day about 0.2% lower. We have a couple pieces of news today. First, Reuters is reporting that NVIDIA and Foxconn are in talks to deploy humanoid robots at Foxconn's Houston facility, where they will manufacture NVIDIA Blackwell systems. According to the report, NVIDIA and Foxconn are working together on a humanoid robot and are aiming to deploy those robots starting in early 2026, when Foxconn's Houston facility is set to start producing NVIDIA's Blackwell Ultra GB300 systems. Also today, the Wall Street Journal is reporting that a U.S. official said he wants to revoke waivers that he says global semiconductor companies have used to access American technology in China. Companies involved include Samsung, SK Hynix, and TSMC. I honestly do not think this has massive implications for NVIDIA because NVIDIA is currently restricted from selling to Chinese companies, and this news pertains to semiconductor manufacturers that are operating inside China. The U.S. official clarified, saying that they are, quote, laying the groundwork, and, quote, there's currently no intention of deploying this tactic. So this news sounds like it's just a nothing burger at the moment. Anyway, I mention this news because that's part of what made NVIDIA stock trade lower today. But again, I don't think this situation has any meaningful impact on NVIDIA, and I think it's just short-term noise. Looking ahead, we have NVIDIA's annual meeting of stockholders scheduled for June 25th at 12 p.m. Eastern, 9 a.m. Pacific. While I don't know what will happen with NVIDIA stock in the short term, I am very optimistic about the future of NVIDIA from a long-term perspective. There is so much to like about this company, both financially and technologically. Blackwell has ramped swiftly, making up 70% of NVIDIA's data center revenue in Q1. Jensen told us at GTC Paris that NVIDIA is producing 1,000 Blackwell systems per week. That's about $3 billion in revenue per week just from Blackwell systems, not counting Hopper and not counting all the other segments of NVIDIA's business. Blackwell Ultra should launch around the end of this quarter, and production should ramp very quickly. Blackwell Ultra is simply an upgrade of the chips inside the Blackwell system. It's not a complete system upgrade like Blackwell, which means we are less likely to see delays in the production ramp like we saw with Blackwell. At GTC Paris, Jensen told us that Blackwell Ultra is, quote, completely in production, and that is right on schedule. After Blackwell has ramped, we should see margins move back up to the mid 70% range later this fiscal year. NVIDIA maintains their competitive moat across the entire stack, both hardware and software. And I think NVIDIA's moat is actually strengthened by NVLink Fusion as it increases the likelihood that customers will remain inside NVIDIA's ecosystem. Now, even if another company develops a better accelerator than NVIDIA's, they're still likely to rely heavily on NVIDIA for the rest of the system. NVIDIA is still delivering performance upgrades that are so substantial that their customers have no choice but to continue purchasing NVIDIA's latest products in large quantities. And while it is unfortunate that NVIDIA had to remove all China revenue from their forecasts, sovereign AI demand from other regions around the world like Europe, the Middle East, and others can help offset what NVIDIA is missing out on in China. At GTC Paris Jensen told us there are 20 sovereign AI factories being planned in Europe right now, as well as many other AI factories being planned by European companies. And Jensen expects Europe compute capacity to 10x in just 2 years. It would not surprise me to hear about more sovereign AI deals from other regions of the world as the year goes on. All things considered, I am bullish on the long-term future of NVIDIA. If we get news about semiconductor tariffs, that could cause the stock to trade lower in the short term, but I expect something like that to just be a short-term negative reaction that does not change NVIDIA's long-term trajectory. In my view, the long-term thesis behind NVIDIA remains intact and continues to grow stronger. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.